You might have heard bookkeepers talking about a client with a backlog, or you might have been approached by a client who needs you to get them up to date. In this video, we're going to talk to you about how to deal with a backlog job and how to price it.
Welcome to the Bookkeepers Podcast, sponsored by Xero.
Okay, we've been in this situation before, all of us.
Yeah.
You come across a small business and they say, I haven't done any bookkeeping ever, or for months, or there's a problem, or my bookkeeper's left me.
Yeah.
And it can feel quite daunting because going into that, usually the conversation starts with how much will it cost?
Yes.
But I think that there's also sometimes a real lack of information about what is actually going to be involved.
And sometimes it's a case where the client themselves have been doing the bookkeeping themselves. So even though they may think that the bookkeeping is up to date as of last month, but actually it's not. And I think we need to assume, I'm going to be quite bold here, that basically every job you take on, unless it's a fresh, brand new, clean year, new month of a new tax year or a new financial year, that is going to have some element of backlog in it.
Yeah. Well, I mean, there have been plenty of situations where even there's been an adjustment needed to the prior year. So I think we've always got to do our due diligence about, is this accurate up to this point? And going forward, am I starting from a good starting point?
Yeah. And that is for every single client. So I think in this episode, you're going to learn things about how you should be approaching any client that you bring on, but some may have a bit more to deal with than others.
Okay, so what does it mean, this sort of backlog? Sometimes people talk about a cleanup, but what we're really talking about is the client who either we've uncovered something as we've been working through things with the client, or they have come to us saying, I haven't ever recorded it, or I haven't got any software, or they just give you a load of paperwork.
Yeah, or they come to you at a certain point in time and say, oh, last year's been filed, but we've done nothing this year. If they were to say, I haven't done anything for multiple years, for me, it wouldn't be a client that I'd want to take on. So I would only take on clients that had work to do in the current financial year. I often used to say, maybe I spoke to somebody in maybe December and they wanted to move over to us and their year end was March. I wouldn't take them on until the April.
Okay.
And I'd start with a fresh new financial year and allow whoever their service provider now was to finish off that year, and then they would hand over those year end accounts.
I think that is a really important decision to make about your boundaries and what you're willing to take on as work, because I think we forget that we get to choose the clients we work with.
We do. And, you know, if I did take that client on maybe in the December or the January, every transaction for that whole financial year, I'd be responsible for checking. So I'd have to then go and review that other person's job. But once those accounts have been filed, and as long as the starting position of my bookkeeping or accounting software is as per the accounts that have been filed with Companies House in the UK, and I've got that amazing, starting point. It's done, it's clear, it's as, Companies House believe it to be.
Yeah.
Then I haven't got to look back unless, of course, something comes up and we realise that something's been done wrong. But it's not as much of a big clean-up job.
Yeah, okay, that's really interesting. And I think we should talk about how you validate that the filed accounts agree to the opening balances that you're starting with. First of all, though, I'm thinking about if you were on a discovery call with a client like this, you would probably want to ask them for some information, or you would definitely want to ask, you would definitely want to ask them for some information about what you're actually working with here. Like what information do we need to ask the client for, just even to understand the scope of this work?
Well, before I even would get on the call with them, I'd have kind of checked them out on Companies House, if they're a limited company. Checked them out on Companies House and checked that last year's accounts have been filed and the confirmation statement had been filed. If something was overdue and past the due date and they were starting to get fines and things, that wouldn't be a kind of client that I would be looking to take on board. So I'd go and check that, and then I'd go and look at, okay, so when is the next filing due? It will tell you what their year end is, so I can then make a plan of when I would plan to onboard them, as to like when is either month one, or of course I took some people on, maybe there was 3 or 4 months into their, financial year. And then I would take them on. But if it was closer to the end of the financial year, I'd wait until the new year.
Okay, so the first conversation we need to have with them is really to understand what period are we producing the accounts for, where are they up to, what has been filed, anything we can find out from our own research, but also asking them for like the more detailed set of accounts or access to their software.
Yeah, and then it really is about finding evidence that those balance sheet items are correct. You know, you've got an opening balance sheet, all the balances are there, and you need to make sure that, you know, is there a fixed asset register? Let me see the bank statements at that point in time. Does it match? Because, you know, there'll all be clues as to whether that's been a good job.
Yeah, totally. And then at a sort of high level, your job is then to get up to date with the oldest piece of work and then move through progressively from month to month, starting with the oldest, assuming that starting point is right, and then getting up to date and sort of catching up.
And I would treat each month as a project and not move forward until that month has been completely sorted. Unless you have something in there that is like recurring and you can create bank rules. Each month should get quicker and quicker. But start with the earliest, because that's going to be the hardest things to find. You know, people are going to struggle to find maybe some receipts and evidence of things. So I'd definitely start with the oldest. But notice that at this point in time, this client is still in onboarding. They are still in your like training program on how to be a good client, and they've not fallen into the monthly normal cycle that you want to be in, where you're doing either weekly or daily bookkeeping and much more timely. So this needs to have time set aside so that you are working fast to get this up to date, because you are not going to be able to give the value that you want to give until those records are up to date.
Yeah, and the client might come to you thinking the being up to date is the value, but actually we know that the value is when you can give them real-time insight and that can help them to make decisions.
Yes.
So to be able to do that work, we're going to need access to their accounting records, their bank statements, any paperwork that they've got, and any past tax returns, VAT returns, etc.
Yeah, absolutely. And, you know, you need to be going to become an agent for them so that you can file for things in the future. And when you become an agent, you'll be able to see into their HMRC portals where they stand with these kind of things. You can, again, check the statements in there against the balance sheet to check that, again, it's all correct. When you know, the starting point is really, okay, so they've got the year-end accounts, you still got to do that balance sheet reconciliation before you can move forward. You can't just assume that everything there is correct. And that's what we talk about. Maybe prior year adjustments might need to be made.
Yeah. So once we're doing the work, so we've got all of the paperwork, we've got access, we've taken the client on, we've done all of our usual due diligence, AML processes to bring the client into our practice, we're going to start doing that work. So going back to the oldest month, and I suppose what we're trying to uncover, as well as reconciling the transactions, we're looking for kind of problems and issues that we need to fix. It might well be, if the client has been doing their bookkeeping in the past, maybe it's become more complex, it might not be correct.
Yeah, I mean, you need to review how they're treating sales with regards to VAT and things like that. You might see that they're giving everybody 30 days terms, but giving them the service like on day one. Then you're going to have to be a detective and look at everything, and don't just assume that this is correct. Think, is this the best way for this to be processed? Is this the best way for it to be presented to the customers? And how are the suppliers sending in the invoices? Is this correct? Could we get it all sent to an email address or something so that it can be forwarded to your document processing and your receipt capture? This is your opportunity to go, okay, so this is how things are now. These are the current processes. And if you haven't got a very clear, I mean, for me, I would be saying, this is how we do this. I'm going to teach you the way of how we do this. And everyone kind of had to fall into line.
Yeah.
But if you are going to be working differently and you want to fall into you're going to have to learn. But just remember that you can give suggestions, because they don't know what they don't know.
Oh, no. And I think this is so important to remember, that you are the expert. Like, I think that there is a dynamic around the power of how you become the bookkeeper for a business. So I think the client might be looking for somebody to come and sit in the office and do the work in the way that the work has always been done. but the way the work's always been done obviously hasn't worked, which is why we're in this situation with a backlog. And they may be thinking that they need a sort of employee role, and I think that it's so easy for bookkeepers to fall into the feeling, the mindset of being an employee and doing what the director asks them to do. But they're hiring you as an expert, and what we need to do is see ourselves as a business partner, somebody who can say, do you know what, finance is my thing, I'm going to show you the way, and this is how we're going to do it going forwards. And you'll know that because that's how you work with other clients and other businesses like theirs. So we need to really see ourselves as that strategic advisor and lead, and that is a power shift from employee to business partner.
And that's confidence as well. And I think that when you can really highlight and show your value in a job like this by bringing things up to date, you know, and kind of try and understand in your first discovery calls, what does it mean, the fact that they are behind and that they don't have this information up to date. Try and capture those pain points at that point, because you can go back to them with that and say, you know, when we first met, you were struggling with this and this, and you was frustrated with this. We're now all up to date. And this is how it's going to be going forward. So you get to show your value quite early on, which is nice.
And make suggestions as well. You know, you're going to spot a process that isn't working, for example. You know, there might be a reason there's a certain type of transaction that's never reconciled or always the one outstanding, because they haven't got a system in place. So for you to say, look, I know this space, there's a tool, there's a software, there's a way of working.
I've made a phone call.
Yeah.
And got it sorted.
So we want to understand the problems and then start to fix them. So if I was taking on a job like this, the first place I would go is the bank statement. I would check the bank statements connected to the software, and I would be looking at unreconciled transactions as my starting point. Once I've gone through that balance sheet review, I've got the starting point ready. Now I'm going into the routine work. What is unreconciled and why?
And have I got every bank account, PayPal, credit card? Are they all connected? Because there's many times that the main current bank account will be connected, and then you'll see something come in from Stripe or PayPal, and you're like, well, where's that? Why is that not being connected? And you realise that someone's just been kind of using just that one element in the money coming in, and they've not been grossing it up. So you need to go and don't take anything for face value.
And I think you've said it before, be the detective. So going in and looking, like running some financial reports, just understanding where are we with like aged debtors, creditors, what does the P&L look like, going into some of those codes, expense codes, and just sense checking, is that right? Is that how I think? And having a conversation with the business owner and saying, you know, what kind of information are you going to need out of here? Because I'm going to be going forward now and bringing this up to date. If I can move some transactions around, I'm thinking like zero, find and recode, that kind of thing. If I can move some transactions so that you can make more sense out of this data, this is the perfect time for me to do it.
Yeah, so like you could group maybe together like team costs or, you know, office expenses. There might be some things that they're like, I'm worried about this, I'm worried about that. It's like, fine, we're going to pick it out of this like general expenses or something like that, and give it its own area and put it in with others so you can see what that area is costing. You get to move and change these things. You have the power.
Love it. Other things to look for, like the kind of warning signs or the area, like problem areas in accounts when it comes to any kind of catch-up work or just spotting errors. Salaries accounts, like whether people have got things in the expenses or whether they've got them on the balance sheet, whether they're up to date with, you know, when you're paying like HMRC, you're paying different taxes. Often you'll have people and they just code it all to the same code, but actually there's a national insurance line and there's there are different lines on the balance sheet.
So you want all of those cleared. And also, you know, when you're reviewing the profit and loss, is there, like, even if you look last year, if you split down a report over the last 12 months, you might see some lumpy bits and there might be items there that should have been prepaid and put in this year or accruals for this year. So, you have to go and it's not going to be presented in front of you. You need to know what you're looking for. And that's why we have to be very qualified to do this job, because it's not just given to you, and you're going to have to ask questions and you're going to have to do some digging.
And I think, we've been talking about paperwork for transaction and understanding, and I think that there can be a bit of ambiguity in our community around whether you need every single piece of paperwork. And, we would always push for, yes, ideally you have every piece of paperwork. And I think there is a bit of a sort of split in the industry in terms of how the accounts are prepared. We'll have lots of accountancy practices who might go in and cash code from a bank statement. And I think that approach can be quite risky if you really want to understand the business, because if there are transactions that are missing or they've been paid from another bank account, or, it's so much easier to miss those kind of things.
Yeah, I 100% agree. I think, we are bookkeepers and, we should have pride in our work. Now, is it always possible to get every piece of paper? No, but we can train our clients why it's important and get that systemized. So in the future, it gets better than when you took it over. And obviously, there might be some times where they've buying things from the same customer every time. You've got evidence of their VAT number from the past and you know what they buy from there. And if they don't have it, okay, you can put it through. I mean, I used to not claim the VAT if I didn't have the actual piece. And I would tell the client that's why it's so important. But I would also phone the supplier and get them to send it over to me. So I think there are lazy ways of doing this.
I was just laughing to myself because yesterday we're obviously filming right now, and I went to the Co-op to get us some lunch and I didn't get a receipt, and I made the girl go upstairs and print it out from the computer because I knew how much trouble I'd be in with you.
You brought back an A4 Co-op receipt to the hotel room and I was like, what have you got there? She's like, I made it go upstairs and print it out. I was like, I'm very proud of you. I don't get you in that much trouble. I don't tell you off that much, but I love that I have trained you so well
trained. But that's a prime example. I could have bought anything, and from a VAT point of view, you are making a judgment, and then you're creating a risk situation.
You could have just bought alcohol. I mean, you didn't. You bought eggs. Boiled eggs for our dinner, but milk and tea. So we, but then there's things in there that are 0 rated, and so you do need the receipt. But I think as well, I know lots of accountants would talk about materiality and, the time you spend on that. But we're talking about being bookkeepers. We're not talking about being year-end compliance accountants that are trying to get to that tax figure. We're talking about helping running businesses day to day and being that independent financial department for them so that they can make financial decisions on accurate details.
And if your team are going down the shop and spending all of your money on biscuits, you need to know that. There's a situation there where you might want to be thinking about expense cards, or whether you ought to be getting stuff in bulk, or you can't even have those conversations if you don't have the insight.
Exactly.
No. Okay, let's talk about this big problem we have with backlog jobs: charging for it. Now, we've already said that the way you would deal with this work is you would go back to the oldest month. That's going to take you the longest. You're going to start to see the trends and patterns, and you'll see the same paperwork over and over. It's going to get faster and faster. I have been in this situation where clients have said, I've never done any bookkeeping. They've been in business for 9 months or something. How much are you going to charge? How long is it going to take? It's a really tough one. And we see this in our community.
Yeah, and we see people as well think, well, I will charge them cheap for doing the backlog and get it all up to date, and then I'll charge them a proper monthly fee going forward. And what the client thinks is, well, I might as well just do that cleanup job every year.
And why would I pay the full amount every month?
So what I did was calculate what next month would cost them, as in the month that we're not in yet. How many transactions, how many invoices, how many payees and employees, and how many bank accounts are we dealing with. And I would run it all through Go Proposal by Sage, and I would come up with the monthly fee. Then what I would do is create an alignment fee and say, well, because we've got 6 months to do, that's 6 times that month.
Okay, and that's what you mean by an alignment fee. You're aligning with the current date.
But what I also did then was allowed that 6 months. They didn't have to pay it all up front. They could pay it over the next 6 months.
Okay, nice.
So, so their fee would have been double for the first 6 months, but it helps their cash flow a bit. And then the following year, they'd have gone down into the normal monthly fee.
Nice. And so you are very much and very clearly speaking about pricing this on transaction volume.
Yeah, because I believe if I'm going to do this kind of backlog, that I have to give that first month as much attention as I'm going to give next month. So it's the same amount of work.
How do you feel about we talk about having a gold standard service, and how do you feel about the sort of gold standard service element of pricing bookkeeping and how that might impact a backlog job?
When we're talking about pricing for a gold standard service, we're thinking of all the things we could do. So what I would do is sell to them, and this is where my alignment fee would change. So, for example, the last 6 months, I wouldn't be giving them monthly management reports potentially, or having a monthly cash flow meeting. So the alignment fee would only be for the elements that were needed. So usually the alignment fee only included purchase invoices, bank reconciliations. Maybe the payroll was already done.
Yeah.
Maybe I would just put in a smaller fee for reviewing the payroll and making sure the payroll journals were done. So it wasn't exactly the whole amount that I was looking at going forward. So I sold them the whole thing that they wanted.
Yeah.
They would look at what that monthly fee was, and then I'd explain to them, because we've got to do this backlog, this is a fee that's going to need to be paid, and it can be paid over the next so often.
So if, for example, you had a client who was 6 months behind, and it would cost them, in going forwards, doing all of the work for them monthly, but also having meetings, providing cash flow, giving them like strategic support, maybe your fee for them is going to be, let's say, £1,500 a month for future months. You're going to start charging them £1,500 a month because you're going into that sort of strategic gold standard service straight away.
And my job is to get the backlog done and deliver that service in that month.
Yes.
So that they have the management accounts and everything.
Yeah. So that's putting the pressure on you to make sure you're delivering. But then you're also, let's say that the transaction pricing value, the price of that monthly work for the 6 months backlog is £1,000 a month. You've got £6,000 that you're going to then split over the rest of the year, so it'll be £2,500 per month for 6 months, and then it's going to go down to £1,500 or whatever the new price is based on whatever's changed in their business.
Exactly.
So it feels like, okay, this is annoying because I've kind of got to pay this backlog work, but they're also seeing it as I've started higher and I've moved down. And I think from a pricing psychology point of view, when the customer sees it's going to be less in the future, that's actually really helpful, because I think so often people, if you said to them, I need you to pay me £6,000 today and then it's £1,500 going forwards, they'd be like, oh my God, I don't know, I'll go somewhere else. But what you're not doing that, and they're not then seeing it as a £6,000 or a £12,000 a year job.
No,
they're seeing it as this fee. That's a really interesting way to price it.
Yeah, and that was all through Go Proposal. That's how that was set up, and there was the options to include alignment fees or not. And I thought it was a great way of pricing this when you would really struggle. I know some people price an hourly rate for doing backlog. But like I said before, if you want to offer that gold standard service going forward and that price is going to be more going forward, they might think, well, I'll just stick to an hourly rate. And
I found that really difficult myself. I can remember working with a client who had a spreadsheet, a lot of stock. There were a lot of moving parts, and I didn't know, we don't know everything. I didn't know how to price it. And I said, well, you know what? Pay me for 10 hours. I'll tell you when we're sort of getting low. And that is not a nice way to have a conversation. Oh, by the way, I need more hours. I need more hours. How many more hours? Oh, I don't really know. That does not feel good to anybody.
No, and you've not delivered on any value at that point. So you're asking for more money.
And they haven't seen an output.
It's horrible.
Yeah. So that's really interesting. Okay, final part around pricing. Let's talk about how you actually get the client to pay. So you've said about splitting the payment over the future or the remaining months of the financial year.
Yes.
Okay. Is there any situation in which you might take payment in advance or do anything else?
100%. I mean, to be fair, the kind of clients that I was working with, I already kind of knew them personally or had some kind of connection with them through networking. So I had that element of trust. Now, if it was somebody brand new that I didn't know, I would want more money up front. There was an option on Go Proposal to say split the payments over the remaining term of that financial year or have it as an upfront fee.
Nice.
So I could have had just a one-off payment, and I would have made a judgment call on that depending on how well I knew them.
Amazing. Well, look, we talk about pricing so much more in the Bookkeepers Collective. In fact, we have a whole program called the Professional Pricing Program. If you want to find out more about that, head to our website, sixfigurebookkeeper.com, and you can read all about it. And we'll see you in another episode of the Bookkeepers Podcast.